All right, so as way of introduction, my special guest today is Jon Harp. I'm speaking to you from our studios in Main Street Mortgage in Westlake Village, California. And this podcast is Leaving Your Legacy, Stories about Homeownership. And we are really definite about the idea that homeownership is a fundamental aspect. It is still the very best investment that you can make, the long-term investment you can make, even with the higher interest rates. And there are so many different pillars that it provides the stability, not only financially, but emotionally and with your housing environment. We believe that home ownership is a sacred trust and that you can transform your life through home ownership. And so today we have a special guest. His name is Jon Harp. He's from Ohio, Columbus. Yay, Columbus.
Yes.
That's great, right? And Jon is he's an expert. This gentleman here has originated millions of dollars worth of loans or with home sales, with real estate sales. I do the loans. He does the real estate. He is with EXP. And what he does, it's very unique. And the reason why we have him on the podcast today, the show today, is that he's really passionate about helping other real estate professionals succeed. Mm-hmm. And that is a big deal today because the brain trust of the media out there is really discouraging people from buying. They just, nobody has the answer, but they always have things to say against it. So, Jon, welcome to the show. It's great to have you on today. And let me just get a little bit of background from you. What are you doing right now, Jon, to help you generate sales? Now, I'm going to talk to you about getting into your history a little bit and why you have the passions you do and what you're doing. But just to kind of give the soundbite to hook the people that are watching, what is it that you're doing right now to help you generate business?
Getting back into the trenches. It's one of those things that for me and how I built my business over the last 12 years, it's always been internet leads. However you want to label those, whether it's Zillow, Realtor.com, Google AdWords.
Where do you get most of your leads from?
We're doing a lot with Google AdWords and Zillow. Mm-hmm. That's where we focus. And the reason why and why we love doing it is because they don't stop, right? It doesn't matter what's going on in the world. It doesn't matter what's going on in the economy. It doesn't matter what's going on in the real estate space. Mm-hmm. The one thing that you can always do is you can always generate buyer leads because there's always homes for sale, right? As long as there's an inventory. And even in 2021, when the inventory was low, right? You dangle the house in front of the audience, and the house is what brings the buyers to you.
Yes.
Right. So
that's right.
So, for me, it's as of this moment right now, getting back into the trenches and making sure that you're prospecting on a daily basis.
Now, tell me about how you convert those leads. What's the time of conversion, and what do you do to accelerate that process to help these people? Because the bigger the problem, the bigger the paycheck, right? So you want to be able to help as many people as you can. What do you do to make those conversions happen, Jon?
It's one of those things. I love this question because this is where I help a lot of real estate agents. And they don't teach us in school how to track a business and sales conversions and sales cycles, right?
Right.
And that's a passion of mine of helping people. So right now, the hot thing that we're sending out in this market is new construction homes.
Interesting.
Now, you may not like this from the mortgage standpoint, mm-hmm. but a lot of builders have their own in-house financing,
right?
Exactly. And they're giving better interest rates. They're giving credits towards closing costs. They're giving money towards upgrades, right? To really help a buyer.
They're giving credits towards closing costs. The rates I find are either a little bit higher or the same. Not too impressed with the rates, but the credits sometimes are amazing, right?
So when you think about buyers, right? They want three things. They want selection. They want to know that they have the ability to see everything that's on the market. They want to make sure that they get the best price and or terms. Mm-hmm. It's not always price, right? It could be terms.
Yeah.
And the third thing that they want is they want to know that it's easy doing business with you, right? They want convenience. That's why you have the Ubers of the world and the DoorDashes of the world and the Instacarts of the world, right? So, when I help agents talk to their clients, especially right now, it's how can I deliver through my conversations with them either one of those things, or better yet, all three of those things when they decide to work with me as their real estate agent.
I like that. And so how do you make it more convenient? What do you do? So let's go back to the original question. So those are the three pillars you have. How do you articulate that? How do you put it into a message where people will say, yeah, we're going to stop with Jon? In other words, you're going to be making a lot of calls and there are other people that share the same leads, right? You're not the only one getting the leads.
Yeah.
How is it that you're able to snag them and take them out of the rotation so that it's just you?
Through your preferred partners, right? Your affiliates and some of the value that they're going to bring to the table. One of the things that I say all the time is, hey, if you decide to work with me, I believe I can save you hundreds, if not thousands of dollars when you decide to partner with us and be a client of ours as we go through the home buying process. And I believe that to my core. I believe I can save my clients thousands of dollars, whether that's negotiating price, whether that's partnering up with a lender to maybe give a slightly better rate, right? Because that's over time of their mortgage.
Right.
That could be, hey, my preferred moving company gives all of my clients a discount because of the amount of business that I do, right? Like, so ease of doing business, price and terms, that's how you can articulate some of those things is, I just simply say, hey, if you decide to work with me, I believe I can save you hundreds, if not thousands of dollars as we go through this process.
That's cool. That's really cool.
And then ultimately too, right? Like that just doesn't work over the phone. Then you got to get the client in front of you, right? Face to face,
right,
during a consultation. And then within that consultation is when you can really break it down and show them exactly what you can do for them as they decide, whether or not right now is the right time to buy a home.
I got it. And then how do you take them through that process? So let's say that they sit down with you or they do a Zoom or something like that. How do you then take them through the process? What are some of the value adds that you use? Now, are you talking mostly about doing listings or are you talking about helping people buy?
Both.
Okay.
I believe everything has a process. My coach calls it a sequence, right? A code. There's a code to everything, a code and sequence to everything. So on the buy side, I have a 4-step buyer process. One, I got to get with you face to face. So typically that's going to happen at a showing for the first time because that's the easiest way to get someone else to commit to meeting you.
Right.
Then the second thing is we're going to sit down. We're going to actually do a consultation. This is like you walking into the doctor's office and telling the doctor what's wrong with you, and they're going to take all that information and then they're going to say, okay, here's what I think we need to do.
Okay.
The third step is getting pre-approved. So
wait, let's go back to the second step. So the second step, that's when you really show who you are, right?
Yes.
That's when you have the opportunity to expand yourself and say, this is what I have to offer.
Yep.
Right. So that's when you pitch.
Yep.
That's when you give them, that's when you create the problem. Because I'm working with a coaching group right now, and they continually say you got to sell the problem before you sell the solution.
Yeah.
So it's an opportunity for you to be able to say, in this market, it can be very challenging. It's hard to navigate the process of buying your first home or selling your home. And these are the problems that come up.
Yep.
And this is how we're going to help you navigate and solve those issues.
And how are you different? Right. One of the things that I was taught early on is money moves towards differentiation, not towards similarity. Right. And
tell me about that a little bit. I like that. Money moves towards differentiation, not similarity.
Yeah. So my job when I sit down with someone is I'm not going to sit there and bash other real estate agents. Right. But I do need to create doubt as to why they would think that they should go and have a conversation with someone else. So again, with agents, you should be setting up business partnerships with your preferred lender, home warranty, title company, moving company, painters, right? All of those companies and individuals have their own set of value. And I
Mm.
call it the pass-through value, right?
Mhm.
So,
Mhm.
hey, my preferred lender underwrites every file before we ever start the process. Well, what does that mean? Right. So then I
Right.
have to explain why that's a benefit.
Mhm.
And here's the difference.
I like that. I like that a lot. Mhm.
Another agent may not even explain that, even though their lender may do that.
Anyway, right. But you're articulating it. You're actually telling them the value that's there that they don't know.
Exactly. And sometimes it's not always big value. And this is where a lot of agents get caught up in this process. It does not have to be big value. It can be small, simple value as well.
Like, give me an example of what that would look like.
For example, we have what we call a ravings fan list. So if you're a client of ours, you decide to work with us and you buy a home or sell a home through us, we have a power washer that you can borrow at any time. Right? Like that's not a big value add.
Right.
But we have clients take us up on that all the time. It
And
cost
that's
us
something, yeah.
$300,
Right. Right.
But we have ladders that they can borrow. They can come and use our office space for an event if they want. We've had people, Boy Scouts, we had a Boy Scout event at our office. They used our office for 3-4 hours on
Oh,
the weekend.
interesting.
But
Now
if you're not
that's
explaining
fascinating.
if those
Yeah.
small types of things,
Right.
right? Or I don't know how it works in where you're at, but title insurance,
Hmm.
right? In my market, title insurance is paid for by the seller. It's stated in our contract.
Yeah.
But we articulated that I guarantee that you will get title insurance paid for by the seller, or I will pay it out of my own pocket.
I see.
Right.
I like
So,
that. Okay.
those types of things, how can you articulate for us where we're at, title insurance is $1,500 to $3,000.
Yeah.
So when I say in the beginning, hey, I can save you hundreds, if not thousands of dollars, I truly believe it to my core. And I'm going to show
Right.
you how we do it.
And you're already starting to deliver on that because those are easy things to deliver on.
Right.
Right. It doesn't
Right.
take a rocket scientist to figure that out.
And the other agent has some of those same things, but they just may not explain it. Right. So that's the differentiation, right? Like I'm
Right.
explaining it. And then I'm creating enough doubt as to like, oh man, Jon, they do a lot, right? Like I don't need to go anywhere else.
Hmm. Hmm. I like that. Okay. So that was the second step. You get,
Yep.
okay. So tell me about the third step.
The third step is the pre-approval.
Okay.
So, I look at these as your client jumping through hoops, right? And if they jump through hoops and they listen to you along the way, eventually they're going to listen to you when it comes to writing an offer, negotiating terms, all of those things.
Yeah.
So the third step's getting pre-approved, talking to, preferred lender or lender that you're comfortable with.
Yeah.
And then the fourth step is asking them to work with you exclusively, actually having them sign a document saying, you're going to be my agent to represent me during this process.
I got it. Okay. All
And
right. So let's go back to number three real quick. So what is your criteria for a lender? In other words, when you say, hey, I want to introduce you to such and such, why do you choose one lender over another lender?
for me, I like to create partnerships, and a partnership is a two-way street, right?
Yeah.
If we're going to partner with,
And
XYZ.
why do you prefer partnerships? Why do you like that?
At the end of the day, it helps, if you're looking for a team of our size, if you're looking to grow a team, it's hard for the real estate agent to take on every single expense and thing that you need in order to scale and grow.
Yeah.
So
Hmm.
through your partnerships, it's not always the money. There's different partnerships that you should be doing based off of where you're at in your career and how many deals you're doing. But for where we're at in our situation is, a lot, that's how they helped us with our internet leads. I always tell people there's two big things that helped us grow. We started to charge a transaction fee on
Hmm.
every deal.
Hmm.
And the second thing is our partners helped contribute
To
marketing dollars
Yeah,
towards
that
lead.
sounds. And how much is your transaction fee?
We charge $5.95.
595. Okay. And then
Yeah.
on the lead generation, is that 50% or what is that?
Hmm.
Okay.
Yep. And that, the one good thing that can scale up, that can scale down, right? There's no set number. It's just,
Right.
what's going on, right? What's
Mm-hmm.
happening in the business, all of those things.
Mm-hmm.
But that's not for everyone, right? Like a brand new agent shouldn't be doing that type of partnership potentially because they may not have the capital. That partnership may need to look a little bit different.
Yeah.
So for us, that's one big thing. Obviously, the service, the communication,
So
all that
yeah,
has to
yeah.
be there.
So on the lender, how do you make that so that it becomes a benefit to the client? When you say we're going to get you pre-approved, what is it that you say about the lender that creates them to want to, if it was me, call me?
Yeah.
What do you, how do you introduce your lender? Because you want to introduce your lender as someone who's value added, someone who's
Yes.
been in the business, or someone's on a team, or someone who knows what they're doing, or
Yep.
someone who uh, commits to their word. When they say that you can qualify and you can buy,
Yep.
you really can.
Yep.
Yeah. So tell me
I
a little
mean,
bit about
it's understanding your lender and what they bring to the table as well, right?
yeah.
It's that pass
Mhm.
through value. So, um, it could be, hey, my lender has a 21-day close guarantee if that's what they are offering,
Right,
right? Like,
right.
hey,
Hmm.
my lender underwrites all of their files up front. Hey,
Hmm.
my lender has a flat origination fee.
Mm.
Um, you know, whatever that is, to me, it doesn't matter. I just need to know what the lender's providing, and then I just position it in a way of like, hey, when you decide to work with us, this is one of the value adds you're going to get as well. You can use any lender that you would like, but here's a lender that I always recommend, and here's why.
Yeah.
They
Here's a
offer
lender that
free
I've
refis
vetted
for
out.
life.
Yeah.
Their flat origination fee, and those things there add into my first statement.
Right.
I can save you hundreds, if not thousands of dollars when you decide to work with me.
Very good.
And
Huh?
that is, like a free refi for life,
Yeah.
or, my origination fee is only $1,000, where this other bank, it might be $3,000.
Yeah. Okay. And then, so now we go to the fourth step.
Yep.
Well, the fourth step is how do you, if it's a buyer, right? Because listing, the listing, obviously they have to sign the agreement.
Yeah.
So the question is this deal with a buyer agreement is kind of new, right? Because a lot of agents have not done that, but because of the lawsuits going out, because of litigation that's happening, it's
Yeah.
paramount that that happens.
Yeah.
So how do you transition them into that to want to make that kind? Because I personally believe that it's better for you for the consumer to have a buyer's agent and not go to the listing agent, because then they don't have anybody in their court. They don't have
Yeah.
anybody in the side of their ring, throwing the punches. It's not going to happen. So you want to be represented. So how do you go about that?
So we have our whole buyer presentation is in a magazine format. It looks like a magazine.
Mm-hmm.
And it's to your point of what you just said on the listing side. There's a listing agreement. Well, why isn't there a buyer's agreement? Like,
Right.
why are buyers agents afraid to ask their clients to commit to them? But it's standard on the other side, right? It's standard to do a listing.
Right.
And all I say is, look, all I ask is, if you decide to work with me and you think I'm the right fit, is that we sign this agreement saying that you're going to work with me exclusively. And in return, you're going to get all of these things that we just went over,
Yeah.
right? You're going to get
Mhm.
my partnership and affiliate deals. You're going to get the guarantees and services that I just laid out for you. You're going to get, the way that I handle my business and communication, right? You're going to get all of those things.
Right.
And over the course of my career, I maybe have had one person that went through that whole process with me that has said no.
Wow.
And
So you do this as a
ultimately,
general rule then, right? You do this all the
mhm,
time.
mhm. And it was hard in the beginning, right? Because I wasn't comfortable and confident in delivering that.
Hmm.
But now, as an experienced agent, and this is what I tell people all the time. It's not to make them feel that they are like stuck with me, right? But it's the act of having them actually sign their name to a piece of paper saying that they are going to commit to me.
Yeah.
And I use this analogy all the time, and people usually laugh. And I tell my clients this when I'm sitting down and talking to them. I said, hey, all this is we're just going Facebook official. We're just saying that we're dating, right? And
Mm-hmm.
at any point in the future, you're just letting the world know that you're off the market. So if you walk into an open house, or you walk into a builder, you just tell them that you're working with me. Or if you come in contact with the listing agent, you just tell them that you're working with me. And if for some reason, you want to rip this up and go our separate ways, we'll do that. And I use the Facebook analogy because most people
That's cool.
get that and understand it.
I like that. And so what you're doing is you're making it so it's no risk. If they don't want to work with you, you'll rip it up.
Yep. Yep. We have a
Wow.
cancellation guarantee. So
And what
they
is
can,
that?
they can
How
just
does that
cancel
work?
that agreement at any point prior to us writing an offer on that first house.
Wow.
So,
I like
you know,
that. That is really great because you're reversing the risk. They don't really have anything that they have to worry about. I mean, that's really got some good keys to it there.
and honestly, like I said, the biggest thing is someone actually signing a document saying that they're willing to work with you.
Right.
That's the commitment piece there. That's the powerful part. It's
Yeah.
not like this, hey, I got this legal, document hanging over your head.
Yeah. Yeah. I like that. I like that, especially when you give them especially when you give them the opportunity to just cancel if they want to do that.
Mm-hmm.
I mean, that makes a lot of sense to me.
Yep.
And then they don't feel like they're tied in for the rest of their lives to you. And
Yep.
you can go ahead and move forward and actually help them, because once they're committed to you, that's when you can release all of your energies and you can put everything into them. And I
Yeah.
think that that's one thing that I've found that the buyer's agents have not been articulating the message of what it is that they can offer, and they don't feel that their value comes up to the signature that's required.
Mm-hmm.
And yet, when I look at it, the buyers do a tremendous amount of work. The buyer's agents really go above and beyond. And my feeling has always been they're spending a lot of money. They're spending as much money as they may spend on a listing.
Yeah.
So why not get an agreement for it?
Yeah. And the going through the 4 steps, I always tell our agents that you will lose people at each one of those steps.
Right.
And
Right.
that's what we want,
Mm-hmm.
because now that's telling us that they're not as serious or motivated.
Yeah.
Right. And if they go through all 4 steps and they say yes to you on all 4 steps, yes, I'm willing to meet you at that house. Yes, I'm willing to come and sit down with you. Yes, I'm willing to get pre-approved. And yes, I'm willing to commit to you.
Yeah.
They're probably going to go to the closing table.
Yeah. That makes a lot
Right.
of sense.
And they're probably going to listen to you,
Right.
because they just said yes 4 times to you.
Yeah.
Right.
Right.
And you will lose people at the pre-approved stage. You will lose people, eventually, if you ask them to work with you. There will be some that you will lose.
Mm-hmm.
But if you do those out of order, if you skip 1 or 2 of those, you're not going to get the result that you're looking for.
Right, right. So you've really got it laid out to what, so it's like a funnel where you're making commitments until finally they're going to be able to sign the buyer broker agreement.
Yeah. And like on our listing side, we have 7 mini yeses before we ever ask them that they want to work with us on the listing side.
Oh, I like
Because
that. Okay.
if they say yes along the way in your presentation,
Right.
right, based off of the value adds that you're going to be bringing to the
Okay.
table.
So let's hear about those 7. That sounds fascinating.
So one is expert advice, right? Like, hey, and you break down, how can you articulate your expertise based off of the sale of their home, right?
Yeah.
And at the
Mhm.
end of that, you say, hey, do you see, by hiring an expert and getting expert advice, that this could potentially net you more money?
Mm.
Yes, right.
Yes. Mhm.
And then the second one is differentiation. Hey, here's how we're going to differentiate your house, from the marketplace, from the competition, the other active listings. Do you see how this could potentially net you more money?
Mhm.
Yes.
Mhm.
Right. So you're getting these small yeses. So that way, when you say, hey, John, like, let's go ahead and get this listing paperwork signed,
Yeah.
they're
It's much
probably
easier.
they're
Yeah,
probably
you've
not going to say
already,
no to you.
right, you've already introduced them. What can you tell us what some of those other yeses are?
Law of
Share those with us.
differentiation, law of cooperation. This is going to be a big one, with the lawsuits and how they shake out.
Uh-huh.
I think the stats 71% of all deals are done with a co-op agent involved.
Mm.
So why is it in the benefit of the seller to make sure that we position the home to attract not only the right buyers, but also the buyer's agent?
Agents, because they're the ones that's looking at the inventory, right?
Well, they're looking at the inventory, but an agent can also hype a house up, or they can tear the house down.
Right.
So, that's one of the laws. The law of execution, which is, having your back end team, which would be your title company, your admin support, right? All of those things. How are we going to make this process as smooth and as easy for you on the listing side?
Right.
Right. My staging company, all of those things. Right. So articulating that in the benefit of the seller. Hey, do you see how having a
Yeah.
full-time admin staff and a title company and a survey company working on your behalf to make sure
I
that you're
like that.
passing off free and clear
Yeah.
title,
Yeah.
right? So when you're doing those types of presentations and consultations, you want the many yeses, because they're not going to say no to you when you ask them to be their
Right.
client.
Right. I like that. That's very good. Okay, so here's a question I have for you, Jon. You saw our podcast and you reached out to us, which is really cool. The fact that you made the effort to reach out to us and say, "Hey, I'd like to be on your show because I want to spread the word. I want, it came from a place of passion for you,
Mm-hmm.
and I want to understand what that passion is. I
Yeah.
mean, obviously, it's pretty clear that you're good at what you do. And so the question is what's your passion? Why you reached out to us, which I'm so grateful you did. What was it that caused that? Because there's a lot of people that watch our podcast and they go, "Oh, that's interesting." But Jon Harp picks up the phone and says, "Hey, I want to be a part of your podcast."
Yeah.
So why is that?
Well, one, I'm a big follower of Gary V.
Okay.
And, Gary V, says, hey, go and DM people, right? If you want to get in front of them, you got to DM them and offer, yourself to them, right?
Yeah.
Or whatever you can provide.
Right.
But, for me, my passion is I want to attack the failure rate of real estate agents in our industry.
So tell me about
By
what
the
that
end
means.
of year 2, the failure rate is 87% of a
Wow.
real estate agent.
That's crazy.
And I don't believe it has to be that way.
Right.
I believe that our industry sets agents up for failure.
Oh, no, wait. Well,
Through
okay. Stop right there. That's interesting. Sets agents up for failure. Tell me about that.
low bar of entry. So in my world, it's in my state, it's $1,200 to get your real estate license.
Mm-hmm.
You go to school, they teach you the stuff to pass the test, but they don't teach you how to build a business. They don't teach you how to go and market yourself. They don't teach you
Interesting.
what tools and systems that you're going to need in
Oh,
order
you're
to be
absolutely
successful.
correct. Yeah.
And the reason why I'm passionate about it now is because I did not have the new agent struggles. I had a mentor from day one. I got lucky. I'm still with him. He's still my team lead. I've been with him my whole career.
Mm-hmm.
And day one, I had someone that was willing to invest their money in my success,
Yeah.
provide me with coaching, provide me with mentorship, provide me with the CRMs, provide me with a full-time admin, to where I know a lot of new agents don't have those things.
Yeah.
And I know a lot of new agents can't afford those things.
Mm-hmm.
Right. And I don't believe it has to be that way.
Yeah.
I believe that real estate is simple, but it's hard. And
What do you mean by that?
what I mean by that is real estate is a contact conversation sport. So me sending out DMs is as if a buyer or a real estate agent is reaching out to their SOI.
Mm.
Now, you know how many DMs we've sent out that people haven't responded to us or said no or whatever,
Yeah, that's
right?
interesting.
But
So when you send out a DM, who are you DMing?
I'm reaching out to people that have larger audiences, other real estate agents, other people in the real estate space that have podcasts. I
Ah,
have my own podcast, and I know what it is to try to fill that with guests all the
yeah.
time,
Yeah.
right? But it's the same thing with a real estate agent. If you're not sending out enough contact attempts, right, to your SOI, to your database, whatever,
Yeah.
open houses, whatever it is, well, then you're not going to create enough conversations. And the conversations turn into then face-to-face appointments.
Right. The
And the
conversations
face-to-face
are the key.
appointments turn into turn into the clients, right? So,
Yeah.
So, with me doing this, right, I'm doing the same activities that a real estate agent should be doing. It's just a different angle,
Right.
right?
Right.
Different target.
Right. Okay. So what are you, do you have a program, or do you have are you recruiting, or what are you for agents? I mean, the failure rate of real estate professionals is massive.
Yeah.
So how are you able to translate your passion into actually helping them? What is it that you do that really makes a difference for them?
Yeah. So for me, it's I created the real estate cheat code, and within the real estate cheat code, there's three main things. There's the real estate launch, there's fast track, and then there's the value advantage.
Okay.
And the launch is helping people understand how to go out and build the business. I call them business pillars. So that
Okay.
would be open houses, door knocking, internet leads,
Right.
sphere of influence, social media. Helping agents understand which ones are the best fit based off of their personality and their interests.
Oh, I love that.
Then getting them to understand the business tracking behind it. So how many open houses do you need to hold? How many people typically come through? How many of those people sign in? How many sign-ins turn into consultations or conversations, right? Understanding the math behind it, because
So you really got the analytics and metrics behind it.
And if you can get the math, then it removes all of the emotion of the rejection.
Right. Oh, I love that.
Either you did it or you didn't.
Yeah, because you
right?
know that you're going to get 30 rejections or 20 or whatever it is. It's just like water's off a duck's back, right?
Exactly.
You don't take it personally because you know that you're in a numbers game.
Because you know the math behind
Oh,
it. Whatever it is.
I like
Whatever
that.
it is.
That takes out the subjectivity and the emotion, and just saying, I'm just numbers right now.
Yeah. Yep.
Yeah.
And you can do that with any aspect of real estate.
Right.
So, and then the fast track is I created a daily success plan, and that is something that agents should be doing, or anyone in the business space. They print that sheet off every single day, and if you do these activities every single day, eventually you're going to have success.
Right.
And it's a combination of text messages, handwritten notes, social media posts, social media comments, calls to either your SOI or internet leads if you're doing internet leads. So it's really a daily guide, a daily plan, because a lot of new agents, they don't know what to focus on.
Yeah.
And that's why they struggle.
Yeah, they need some structure.
Exactly.
That's great. Now, there was a third part to that too.
The third part is the value advantage, and that is your consultations, right? That's your listing consultation, your buyer consultations.
Right.
And within that, it's broken down into four things. How do you bring value to someone before they ever become a client of yours? While they're a client of yours, after being a client of yours, and then through your partnerships.
I like that.
So how do you articulate that to your people, leads, clients,
right,
past clients? How do you articulate your value in each phase?
I love that. Love that. Now, how do people get a hold of you?
Best way is follow me on social. Jon Harp on Facebook, Jon Harp _ on Instagram. You can find my YouTube channel. Any way you can,
That's fantastic.
Any way you can get a hold of me.
I love it. I love it. I love it. Okay, so you're really, really in a area where you want to create passion. You want to create a path to help real estate professionals really understand the business and have success at it.
Yeah.
And I think that is fantastic.
John, I'm actually curious. How did you get started, and when did you get started in the business?
Well, I got started back when the cavemen still existed. I mean, this is a long time ago. This is when we had to fill out the application with a typewriter. I mean, we're talking a long time, right? And boy, it was all hand, all our application packages were all paper, and we had to We had to send those to the lender via special trans box. I mean, it was a long time ago. And really what got me going was the idea of seeing the transformation that takes place when people are in the right house. That doesn't only mean first-time home buyers. I mean, we have a friend who had a house, they owned a home, it was almost paid for, and they wanted a larger home because they were going to have grandkids, and they wanted an active house. But they were really hesitant about it. And then what happened is that they started looking, and all of a sudden she walks into the kitchen and she says, "I'll buy it." And basically she bought the kitchen and threw in the house, right? And the reason is she loves to cook. Well, with her current home, she couldn't really feel it, when the energy's not there, when the environment's not right, it's like, nah, let's just have beans, right? But when the energy's there, you got an island, you got some stoves, you have everything that you need, you have room to spread out and put all your food and fix it. Then all of a sudden, boom, she starts making more food. And what happens when you make more food? Well, more people come, more family members come. There's more excitement, there's more energy in the house. And so it transformed their entire culture, their entire life. And so this idea of environment is really a big key, and people overlook it all the time. That's why people are still renting, because they're settling for something that then they don't realize what they don't know. 37% of people who rent can buy, and most of them don't know it. I mean, that's a huge number, and that's even with higher interest rates. And the best time to buy, as I said in the beginning, is even right now, even when rates are high, because it allows you to be able to have more options to buy your property, right? Yeah. There's less offers on the house because there are less people that qualify. I mean, it's obvious when rates go up, that's what happened. So I'm talking about buying responsibly, whether it's your first home or whether you're buying up or whether you're going down. Environment is the thing that is the key here. It's when you have an environment that you're really happy with, as an individual or as a couple. I mean, as a couple, we hear stuff all the time. The difference in the attitudes and the nomenclature of the home, even down to even down to intimacy. I mean, it is amazing because they're in a place that they feel comfortable with, right? And you cannot substitute that. You can't go rent something and hope that will do that. You know why? Because it's not yours. That's the problem. And that's why I think that it's a joke. And I think it's the media is really hurting people's lives, because the Wall Street Journal, for instance, they said the other day, hey, the average home price and the average home payment, the monthly payment of a mortgage payment today is 52% higher than a rent payment. That is 100% accurate. The Wall Street Journal is right on. They're a very prestigious newspaper, but they are 100% wrong on the whole aspect of home ownership. They don't talk about tax deductions. The fact that the rates have gone up, everybody forgot to talk about itemized tax deduction because the rates were so low. There was no way you could get over that $25,000 threshold. As a single person, you could, right? But it was a little bit tough to do that. Well, now you're way over that, right? I mean, in California, in the market that we're in, if your loan is $750,000, your tax hedge is $1,500 a month. So if your payment is $6,000 a month, you're actually paying $4,500. You ask your employer for more deductions, which increases the amount of money you get, so that at the end of the year, you don't owe the IRS and the IRS doesn't owe you. But the fact is nobody's talking about it. Nobody's talking about the fact that the median net wealth of a renter is $6,000, where the median net wealth of a homeowner is $230,000. So it's a 46% difference. That is huge, right? And the thing that makes it really interesting is that when you buy a home, you tend to save more money. There was a really interesting survey done, John, that I think is just fascinating. It was done back in 1999, so it's a little bit older, but they took it from 1999 to 2009, 10 years, even while the subprime crisis was going on. And they found that the person who's going to rent had $1,100 in cash that was a renter. And then they said, well, how about the person that has the intention to buy, right? Hasn't bought yet, but they have the intention to buy. Well, it just so happens that their number was $8,400. Now, that's not a big difference in dollar amount, but it's a huge magnitude and percentage of over 600%. And so what happens is that there's nothing like when you buy your first home, when you get it in your head that home ownership is where I need to be. That's where I'm going to have the best environment. That's where I'm going to have my best love life. That's where I'm going to have my best family. 50%, there's a 50% chance less that you get divorced when you own a home. Kids do better in school. There's a direct correlation to being in the community as voters and being involved with the community. There's all these things. And so when somebody gets it in their head that they want to buy, then all of a sudden the magic happens. We see it all the time. People come to me, they say, we don't qualify. And I say, well, let's think about what are the options. And all of a sudden we start exploring the options. And you would be amazed at what happens. All of a sudden, they come up with money. They have down payment. We had an interview with a guy the other day, and he said, it was so weird. When we decided to buy our home, all of a sudden, there was money in our savings account because we stopped spending on stuff that didn't matter.
Yeah.
And all of a sudden, we got this money and we had the down payment. We bought the home. And so people are thinking they got to have great credit or they got to have a large down payment. The reality is you don't. You can buy with little money down. You can buy with 3 to 5% down, and you don't have to have a perfect credit. The key is that you can buy responsibly. Yeah. And so this myth out there that we want to bust, saying that renting is better, and it's unfortunate because more people are renting now than in the last 50 years. And every time they make that payment, I mean, I had a gal DM me on one of my comments, and she said 8.125% is disgusting. That's great. But if she's renting, she's paying 100% interest, right? Every single dime, every single penny is going towards the landlord, and she is buying the landlord's property. So she's buying real estate, but she's buying it for somebody else.
Yeah.
And so this notion that, it's okay to rent, the media is saying you can't afford it. There's no way you can do that. And California has one of the lowest affordability rates in the nation, right? I mean, it's like 25%. It's dismal. It's brutal. And so people read that and they go, well, I guess I'm not going to buy. Well, all of a sudden these stats don't take into effect that you can go out and get a second job. You can go to your boss and ask for a raise. You can go back to school. You can get a different kind of job. You can get help from family members. Did you know that right now, 18% of all purchases are non-direct familial? In other words, it's not just your normal traditional family. Right. It's mother and son. It's mother and daughter. It's dad and daughter. It's roommates. I was at a showing of apartments. I graduated from USC. I'm with their real estate program. And they went out and we were invited to tour a brand new apartment facility downtown LA over by the SoFi Stadium and, the new Clippers sports arena that's being built. And I'm telling you, man, it was the most depressing thing I've ever seen. These units were just stacked out. They were beautiful. I mean, they were great location. Everything was just beautiful. And there was a 3-bedroom apartment. And we say, well, what's the rent on that? They say, well, it's $5,700 a month. And I'm hearing in my work, people are saying, no, I don't want to make a payment of $6,000 a month. I'm going, wait a minute, you're renting for $5,700 and you're throwing it all away. And what's interesting is when they get the roommates, the roommates don't need to be renting; they need to be buying together. Mm-hmm. You can get an agreement that'll put everything together that will help them understand, hey, you can do this. If somebody wants to sell later on, that's okay. But at least you are doing forced savings. There's 2 things that are critical, John. One, forced savings, because it makes it so that you're going to build equity with every payment you make. And number 2, and this is the part that people are forgetting about, is they're forgetting about the number 1 priority, which is environment and stability. When you're renting a home, you're not there for a long term. You know that at some point you're going to move. You know that you're not going to be able to make friends with those people around the corner because they're not going to be there and you're not going to be there. And most of all, you know that they're going to increase the price of the rent. Now that is a life that I'm not interested. I can't imagine subjecting myself to all of those variables when if I have the income, I can go out and responsibly buy. Because once I buy the home, the house is mine, right? I'm paying for it, but the note and the deed, they're mine. And all I have to do is make those payments, and eventually those rent payments are going to surpass my mortgage payment. And then when I'm 30 years old and I'm still renting, my payment's going to be $10,000. Is that where I want to be at the end of my retirement?
Right.
You know, when I start my retirement, is that where I want to be?
I love it. I love it. You know, real estate is a powerful thing.
It's powerful, man, because it's
You know,
shelter. It's
yeah,
stability, right? It's
yeah,
your environment. It's an extension of your essence, is what it is.
yeah, yeah. No, I agree with everything that you just said. And honestly, before we jumped on here, my first house, I told you that I had two roommates, two of my
Yeah,
friends.
that's
You
right. You
know,
shared home ownership, right? Friends don't
yep,
let friends rent. That's a
yeah,
big deal. And how
yeah,
did that work out for you?
yeah. We all did great.
Did you end up having fights?
No, it was a great time. It was a good
Ah,
time.
see, right. And so you developed equity, and then you sold. What happened when you
Yeah,
sold?
yeah.
Did you buy each other out, or what did you do?
Yeah, we bought one got bought out, and then
Mhm.
we stayed, and then I stayed an extra year, and then I
Mhm.
sold.
Right.
So
So every time you were making the payment jointly together,
yep,
you were saving money,
yep,
right? I mean,
yep,
it's magic. It's magic because you have to pay rent. You either pay rent from your mortgage as you're buying your home, or you're paying rent to somebody else.
yeah,
And so the key is to really understand that, and that's why I'm so passionate about my book, is I want to ignite a home buying revolution, especially among the millennial generation. You know, what's really interesting, John, is the survey was done that showed that when baby boomers like me were age 35, we owned approximately 32% of the real estate in the United States as far
mm,
as homes go, right? At 31 years of age for the millennial generation, so there's a 4-year difference, they own 4%
mm,
of the real estate in the United States. It's a huge difference. And I think it's a lot because this idea that I need my freedom, I want to be able to move around. And really what it comes down to is that you can have freedom. You can have more freedom. You can
yeah,
move around as much as you want to. It's just that the idea of owning real estate is still the best long-term investment, even with the higher rates.
hmm. Amen,
Yeah.
amen. Well, I love it. You know, it's one of those things where I think we label buyers as either emotional buyers or equity buyers.
Oh, interesting. Yeah.
And I think the majority of people are on the emotional side, and that's where they get caught up on granite countertops and tile backsplash and hardwood floors and all of
Right.
those things, as opposed to, you know, looking at those homes that they may have to do some paint, they may have to do some flooring, right?
Yeah.
Some minor cosmetic updates. But
Mhm.
and I know you mentioned it earlier as well, responsible buying, right? Like
Right. Right.
if we are responsible in this process, if we take more of the equity approach,
Mm-hmm.
then we will be fine. And you can have that flexibility and freedom to
Yep.
move 2 years from now if you get a different job somewhere else or whatever the
Right.
case may be.
You always can do it. See, that's the whole point, John. You're exactly right. You can always figure it out. The question is whether you want to or not.
Yeah.
And there's so much press out there that basically says don't even try, that people who have grown up in rentals all their lives don't want to try because they think that the odds are stacked against them.
Right.
When the reality is that if you got roommates, if you got shared home ownership, chances are you can probably qualify for something that you don't know. And that's what I talk about in my book, Buy Your First Home Today. I talk about the idea that there's a high probability that you can buy and don't know it. And I also talk about the opportunity cost of not buying. If you don't buy now and values continue to increase, see, that's the part that people are forgetting. They're forgetting that your home generally will increase in value. I don't
Mhm.
like to say you want to buy today because your home's going to go up. I like to say you want to buy today so you can start saving, so you can start have stability, and eventually your house will go up. HUD, when they do their projections, it's always a 4% increase across the board. Even HUD, the government says we believe that rates or the prices of homes will appreciate by 4% a year. And
Yeah.
in many different pockets, it can be lower, but it can be higher. And so this idea of being able to get an asset that's actually producing value while you're living in it is massive, right? You can't beat that.
Yeah. And I think it's important, what you're doing with, the podcast, what you're doing with the book, right? We can even do it on the small level. And this is where you make sure that you sit down with your clients and really understand exactly what's going on in their life, and how is home ownership involved in that part of their life, right? Like
Right.
you, as an agent, you win in the consultation, right? Because you really get to understand exactly what are they trying to accomplish, and then how do we make that happen.
Yeah, I think that's right. And I think that the consultation is where you really get down into the deep delve and say, well, what is it about a home that you want? They might have dogs. Dogs for renting is like ridiculous, right? They may have special needs. There's a lot of things that they'll need. And as agents, especially as lenders, we tend to become transactional, right? Transaction, get a deal. But instead, it's really important to nail it down and say, why are you buying in the first place? What is important to you about buying this home versus another home that you're looking at? Yeah.
So good.
Yeah. All right, man. Well, I'm so glad you joined us, Jon. We love you. You're part of our family now. So I hope that we get to interact and connect and stay connected.
Yeah. Thanks for having me on. I really appreciate it. And, look forward to continuing our friendship, and, staying connected, and, helping each other, achieve our goals, and attack that mission.
You got it, man. You got it. All right.
All right. Thanks so much.
All right. You got it. All right. Bye-bye.